Do emerging markets have room to run in 2020?
So great to be part of this R2R moment. And just to remind you, some 3/4 of the BRICS, and that's Russia, Brazil, and India, are at all-time highs in the local market. So this BRICS miracle that we talked about a decade ago or more has actually been working. Now, if you think about emerging markets, they have underperformed. And if you look at the EEM, it's 45% China, and there's kind of at the core of your underperformance. And then the other side of that has been the dollar. And local currencies have significantly underperformed. And if you're an EM investor, your FX is probably 50% of your return profile. So if you think, and so here's the room to run. I actually think the dollar's range bound, if not slightly weaker in the current status quo environment on trade and the Fed. Very, very strong for EM. If you think about the central bank environment, you've had 51 rate cuts in the last 6 months. That's an environment where EM always does well. Granted, even in the last 10 years of liquidity, it has lagged a bit. The most important thing right now is I think in 2020, EM EPS, earnings per share, will outperform the developed markets by 400 or 500 basis points. I'm expecting around 14% earnings growth. We've heard this before. It usually starts out very optimistic into the year, but I think this is a year where you can see that outperformance.
All right, so let's talk about the way that people invest in emerging markets these days. You do it through mutual funds and you do it through ETFs, exchange-traded funds. It's easy to buy the large basket, as you said, to play the bigger play. But are there places in particular within emerging markets, countries specifically, because these days there are ETFs that track countries themselves, where is the outperformance going to come from? Is it China? Is it other places in Asia? Is it Africa, the Middle East? Where is Latin America?
Well, again, I think if you look at the EM, one of the reasons why that will and could outperform next year is the top of the balance sheet. Alibaba finally breaking out after a 2-year basing. Samsung at the top of the balance sheet. Taiwan Semi. I like all that. The Southeastern Asia kind of miracle growth story, I think, gets going again. If you look at Vietnam, VNM, if you look at Malaysia, EWM, they are not huge markets, but they're interesting markets to play via ETF. And again, back to some of the core markets, I think if you look at Brazil and you look at, say, the EWZ, that currency has, despite the local market's outperformance, the currency's been a major headwind because of the politics you mentioned. I think the EWZ is very well positioned, especially in a world where we're starting to get a little bit of that reflation trade back. And I think if you look at commodities and if you look at some of the commodity producing countries, of which Brazil is certainly right at the top of the list, I think they will do very well in 2020.
How much of that for U.S. investors or North American investors will be driven by the company's performance itself versus, say, the currency appreciation in those areas? Because the returns are going to be driven by both. Right. What drives it more, the currency or the corporate fundamentals?
No, that's a great question. And I think there's great companies in emerging that often are, you see, I always say you can't invest in a bad neighborhood. So if the macro and the rates environment and the FX environment are not good, even if you're a great company, you're going to underperform. That's very important to understand when you're investing in emerging. So I think you have seen great companies that have outperformed the index over the last couple of years, and I think you can continue to do that and look underneath the hood. And I think if you think about Brazil, there are great companies in the form of some of the banks that could be outperforming in 2020.
All right, just a few moments left here, Tim Seymour. Over the past decade, there have been pockets of heat within frontier markets, even below emerging markets. Are frontiers someplace we should go?
Well, so if you look at the FM or some of the ETFs that actually track that, I think Frontier, first of all, you're getting a higher growth environment. You're getting, believe it or not, more of a non-correlated environment. If we keep central bank liquidity in the markets, Frontier will outperform. People are reaching out the risk curve. Gotcha. If you look at some of the markets, especially associated with oil and gas in Africa, for example, they will do very well.